Hello friends, in today's video we are diving deep into a new fund offering from Kotak, the Kotak Energy Opportunities Fund. If you are looking to potentially capitalize on the growth of the energy sector, both traditional as well as new, this thematic fund might be of interest. However, it's crucial to understand what this fund entails, its potential benefits, and the risks involved before making an investment decision. Let's review the information mentioned in the scheme document for better understanding. So, what exactly is the Kotak Energy Opportunities Fund? Firstly, it's a mutual fund scheme managed by Kotak AMC Limited. Categorically, it falls under equity schemes, thematic funds. Specifically, it's an open-ended scheme following an energy theme. This means you can buy and sell units on an ongoing basis after a new fund offering period. The NFO is open from April 3rd, 2025 to April 17th. During this period, the units are offered at a price of rupees 10. The scheme is expected to reopen for continuous offer on or before 2nd May. The investment objective of the scheme is to generate long-term capital appreciation from a portfolio that is predominantly invested in equity and equity-related securities of companies engaged in energy and energy-related activities. This includes both traditional energy like crude oil, natural gas, coal, and new energy such as hydropower, solar, wind. However, it is important to note that there is no assurance that the objective of the scheme will be achieved. The scheme also invests in energy allied sectors, including but not limited to chemicals and petrochemical companies, industries and capital good companies involved in energy consulting or manufacturing equipment for the energy sector, bio value, bioenergy value chain companies, and component makers for new energy. The performance of the scheme will be benchmarked under Nifty Energy Total Return Index. This index includes companies belonging to the petroleum, gas and power sector and comprises 10 companies listed on the National Stock Exchange. Now, why the energy sector? The energy market is evolving rapidly. India's energy demand is set to double by 2040. Renewable energy adoption is accelerating with government initiatives. While oil and gas are still dominant, the global energy transition is unavoidable. Electric vehicle revolution is driving a massive demand for electricity and battery technology. If you were to see the investment in the energy sector in 2023, a total of $2.8 trillion was invested. 50% of this was directed towards renewables, electric vehicles, and sustainable solutions. Now, what does this mean for investors? The shift from fossil fuels to renewables creates opportunities in both traditional and new age companies. Energy stocks are cyclical but have historically delivered high returns during an upcycle. Companies leading the energy transition could be the multi-baggers of tomorrow. What is the fund's investment strategy? The fund plans to invest across oil and gas giants. Now, these are companies engaged in exploration, refining, and distribution. There are companies with battery and EV ecosystem, companies specializing in lithium ion battery manufacturing, EV charging infrastructure. Another sector is renewable energy, companies with solar, wind, hydro, and green hydrogen pioneers. Another sector to look at is power and utilities, key players in the power generation and transmission, technology driven energy transition solutions, companies offering smart grids, energy efficiency, AI driven energy solutions, and so on. If you were to compare categories of stocks, if on the traditional front, we have companies like ONGC, Reliance, Indian Oil. On the renewable front, we have Tata Power, Adani Green, Renew Power, and the EV related front, we have Exide, Amaraja Batteries, Tata Motors, and on the global front, we have US and European energy innovators. Let's explore the advantages of investing in this fund. The primary objective of this fund is to generate long term capital appreciation. If the energy sector and the companies within it perform well, investors could potentially see significant growth in their investments. The energy sector is undergoing significant transformation with the increasing focus on renewable energy and the continued importance of traditional energy sources. Investing in a fund focused on this theme could allow investors to participate in this potential growth. The fund invests across both traditional and new energy sources, as well as allied sectors, offering some level of diversification within the broader energy theme. The investment strategy will be active in nature, meaning the fund managers will actively select and manage the portfolio to aim for better returns than the benchmark. Being an open ended scheme, it offers liquidity as units can be bought and sold on business days at NAV based prices. The scheme also offers a direct plan for investors who invest directly with the fund and a regular plan for those who invest through a distributor. Under each plan, there are options for growth and income distribution cum capital withdrawal with payout and reinvestment sub options. It is equally important to be aware of the potential disadvantages and the risks associated with this fund. According to the scheme riskometer, the risk level of this fund is very high, as well as the benchmark riskometer is also very high. This indicates a significant potential for losses. As a thematic fund, it primarily invests in energy and allied sectors, which limits its ability to invest in other themes. This concentration risk can lead to higher volatility in the portfolio's NAV compared to a more diversified portfolio. Due to the concentrated nature, the scheme may face relatively higher liquidity risks in case of significant redemptions. Owing to the higher concentration in a specific theme, the risk of capital loss is relatively high. Like all equity investments, there's a risk that companies in the energy theme may not achieve expected earnings, or unexpected market, or company specific events may negatively impact the investment results. The performance of the fund is heavily reliant on the energy sector. Factors such as changes in government regulations, commodity prices, technological disruptions, environmental concerns, and global economic conditions can significantly impact the energy sector and consequently the fund's performance. While the scheme will predominantly invest in equities, it can invest up to 20% in the debt market and money market securities. These investments carry their own risks, including credit risk and interest rate risk. The scheme may use derivatives for hedging, portfolio rebalancing, and other permitted purposes. Derivatives are a leveraged instrument and can lead to disproportionate gains as well as losses. The scheme also intends to invest up to $5 million dollars in the overseas securities during the NFO, with a maximum limit of 20% of its net assets. This exposes the fund to risks such as currency fluctuations and political risks in the foreign markets. There's also risk of exhaustion of overseas investment limits set by the SIB or the RBI. The scheme has enabled stock lending, which carries the risk of counterparty default and temporary illiquidity of lent securities. The scheme may invest up to 10% in any of the real estate or infrastructure trusts, which comes with risks like liquidity risks and reinvestment risks. Kotak Energy Opportunities Fund will be managed by the following individuals. Mr. Upadhyay and Mr. Pawar will be co-managers for the equity and overseas investments, while Mr. Abhishek will be responsible for the debt investment of the scheme. All three have close to 2 decades of experience in the fund management and equity research space. Now, the most important question: is this fund a good investment for you? Let's see. Given the very high risk, classification, and its thematic nature. With significant concentration risk, this fund is generally suitable for investors who have a high risk appetite and are comfortable with potential volatility and the possibility of significant losses. As the investment objective is long term capital appreciation, investors should ideally have a long term investment horizon to ride out potential market fluctuations and allow the energy theme to potentially play out. It would be beneficial for investors to have some understanding of the dynamics and potential of the energy sector, both traditional and renewable, to make an informed decision. Due to its thematic nature and high risks, the fund is likely not suitable as a core component of a diversified investment portfolio. It might be considered as a satellite allocation for investors who are looking to make a safe sector bet. In summary, the Kotak Energy Opportunities Fund is a thematic equity scheme focused on the energy sector, aiming for long term capital growth. It offers potential benefits from investing in a transforming sector but comes with very high risks due to its concentrated nature and equity market exposure. Consider carefully before investing. Thank you for watching. If you found this video informative, please like, share, and subscribe for more mutual fund analysis. In case you have any questions, let me know in the comments below. Thank you.